by the way, in the case of SpaceX, you can invest in it. So basically, we have different mutual funds own it. Barron Partners funds own it. Barron Focused Growth Fund owns it, 8 or 10% of their portfolio. But it's really, this is going to be the largest company in the whole world. So I think Tesla in the next 7 years will be about 4 or 5 times as big as it is right now in the stock market. And this company over the next, and that'll be worth, trillions. And this company, SpaceX, is going to be worth 500 billion, 600 billion. It's now 150 billion. It's 150 billion addressing a market capability of, according to Goldman Sachs and Morgan Stanley, $1.2 trillion of annual revenues, growing, $1.2 trillion of annual revenues. And basically, they're going to get hundreds of billions of dollars of revenues for a company right now valued in the stock market for $150 billion. And nobody can compete because nobody can make these rockets go up and come down and land again. And then in addition to that, what is threatened here is cargo. They're going to have rockets that go from Nevada to Australia. You can move ordnance, you can move air freight, anything you want, 35 minutes, anywhere in the world. And so basically, that's what's going to happen for long term in this company. But they have all these in SpaceX. The competitive advantage. So the railroad to space. Okay, next.
Finish your thought.
So the railroad to space is one, and then the second thing is the satellites. And so railroad to space is the rockets, and the satellites are how they get there cheap.
Elon is an innovator, a dreamer, a believer, and you are too, and you've made a lot of money along the way being with him.
So we've been an investor in. So Tesla is now at a similar stage where it was in 2014, 2015, when I was investing, 16, and they were doing 40,000 cars a year. They're now doing 1.8 million, on the way to 20 million. And they've been growing 50% a year, and this year they'll probably be up, 25, 30%. Next year, about the same. But there's a new car coming.
25, 30% revenue?
No, units.
Or units, okay.
Units. And then they got this, the battery business, which is $6 billion a year, and that's going to be up triple over the next 3 years, and that's going to go up 30 times.
There's been a lot made over the UAW and the potential strike that is facing the big three automakers here. And what's been brought up is they have all of these EVs that they have to deal with. Their cost basis is quite a bit higher than Tesla's.
Way higher. So, so every time they sell an EV, they sell one fewer gasoline car. And the gasoline car they make money on, and the EVs they lose money on. The traditional OEMs are troubled right now. And I think ultimately, they're going to make metal, they're going to make the units, and ultimately they're going to buy software from Tesla. Tesla is going to be like like Intel inside of a Microsoft computer. That's going to be Tesla. So Tesla is going to be everything that makes the car. All the inside is going to be Tesla. That's what's ultimately they're going to be licensed.
Are you buying any additional Tesla or SpaceX, or have you kind of maxed out where you feel comfortable with your fund, which is a diversified fund?
In the funds that I manage, I've been maxed out. We had when the stock went up 20 times after we bought it. Yeah. We sold for clients about a quarter of the shares. I didn't sell a share personally. I committed to the directors of our mutual funds. I only invest in mutual funds normally. I made an exception in this instance, and I said that I was the last in, I would last out, and I won't sell a single share for myself until we sell all of our client stock. And as far as buying more, I would buy more if I could, but I can't. And other guys at our firm are nibbling. They do things like, this is a great price. This is when they introduce this Model 2, they're going to have the cost half of what it is right now, half. And they're going to sell the car for, I don't know, maybe a third less than what it is right now, and there's credits. So this is Toyota almost bankrupted the whole automobile industry 20 years ago.
Well, do you at the same time think that the big three have their work cut out for them? We're going to have UAW head on today, Sean Fain, and what the rank and file are asking for, given the uncertain future of whether Americans ever embrace non-Tesla EVs. I mean, would you think that the big three have their work cut out for them? Would you at least acknowledge that, do you think?
I haven't studied the big three relationships with the unions. I don't own them, although I really like Mary Barra, but I don't own them.
Would you like to compete against Tesla?
I would hate to compete against Tesla. So Warren Buffett initially would say, said 20 years ago or 15 years ago, he said that he wouldn't invest in Tesla, and now he says he would hate to compete against Tesla. So to go on to this, so the Model 2, this is coming within by 2025. When that comes, that's going to be exactly the same thing as what happened when Tesla introduced the Model S. So you're going to see this tremendous change going on there. And then, as I said before, the software, core competency, Model 2, half price, and then Dojo. So Dojo.
Oh, right.
Yeah, so I said, what is Dojo? Yeah. So Dojo is a training. And what that is, that they have this massive amount of data for all these cars that have been driving around for millions and millions of miles, and that keeps growing exponentially. No one has that. They have this data, but to crunch the data, you need compute. And compute is what NVIDIA has. And NVIDIA has compute, a chip, which is for everyone to use. They have all these different, all these different, opportunities that this company has. What our company has is they're making their own compute, and they, in 18 months, are going to have more compute than anyone in the world, Tesla. And compute is stuff that's in your basement as opposed to the chip that's in your car. So what they're going to have is they will have so much massive capacity to provide services to cars and to be able to train this data, to train your car on this data.
Right.
So what's the competitive advantage is the data, right, and the training is going to be provided by this compute, and they're going to have more of it than anyone. Nobody can catch them. Last year, by the way, you read about the number of people that are seeking jobs, and they're saying that there's too many people seeking the jobs, or whatever they say it is, with too few people. And what Tesla has is last year, or this year, I think they have 3.5 million people seeking 30,000 jobs. Last year, they had 3 million people seeking 20,000 jobs. So there's 130,000 people. So